Hello, a very warm welcome to all the participants. Thank you for joining us today in Grant Thornton's webinar on Budget 2019. I am Vikas Vasal and I have with me my colleagues on the left Riaz Singna, who focuses on direct tax, and on my right Suresh Rohira, who focuses on indirect taxes. We also have with us on the panel economist Dr. Jaideep Bhattacharya from IIT Delhi. Till today morning, I think the debate was whether it will be vote on account or an interim budget. I think once we heard the Honorable Finance Minister, there was no doubt left in our mind that it's interim budget, and interim budget with a bang, with a lot of policy changes being announced in part A of the speech. In part B of the speech, we saw some changes being announced, more populist on the individual taxes. Again, a very welcome change, especially in the election year. I think we were expecting something similar to that. Borrowing from the Honorable Finance Minister in terms of the Bollywood style, I think what he mentioned in the entire speech was all is well. And in terms of the budget till the elections and beyond, I think the message again in the Bollywood style is picture abhi baki hai, but it is quite rosy if we go along together. If we have to select a key theme in the budget, I think in one statement it will be Jai Jawan, Jai Kisan and Jai Aam Aadmi. I think the entire part A of the speech and the part B of the speech sums up Jai Jawan, Jai Kisan, Jai Aam Aadmi. Let's go straight into the budget, both part A and part B. In terms of the macroeconomic analysis, I think there is a lot of punch packed in the part A of the speech, lot of policy announcements, lot of big ticket reforms this year as well as go forward on the hope that the government is likely to continue. Jajit, I think there's a lot of punch packed in this. What's your take on the macroeconomic analysis?
To begin with, I think we have landed ourselves in a very nice situation from a macroeconomic perspective. We are growing at a blistering pace of 7.5% growth rate as an average in the last 4 years, which has propelled us to become the 5th largest economy by the end of this year. Now, if you look at that in relevance to India's contribution to the global growth, we have doubled our contribution from 2008 to 2019. We are now contributing about 14.5% of the total global growth. Now that looks very rosy, but once you start looking at the challenges that we face is in an economy that's growing that fast, how do you make sure that the infrastructure keeps up to the pace? Otherwise, we'll start having a breakdown in terms of infrastructure. So what we were looking forward in the economy is whether there is enough money being put into the infrastructure to support the kind of growth that we foresee in the next few years. In fact, by 2022, we are supposed to become a $5 trillion economy. Do we have enough roads? Do we have enough railways, enough inland waterways to support this kind of a growth? Fortunately, we saw enough money being committed by the government in bringing in that kind of an infrastructure in place. Having said that, the other dimensions to a healthy economy is whether we have a very good current account deficit. Now, in the last 2 years, there was a muted growth because of the structural reforms being brought in by the government. But in spite of that, the IMF has predicted that next year we will be having a 7.3% growth. So we'll be bouncing back and will then be accelerating. But in that context, how do we make sure that we are not having a unmanageable current account deficit? Because IMF had also predicted that we will have a 3% current account deficit. Fortunately, again, our current account deficit has reduced by about $5 billion to about 2.6%. And that's a very healthy sign. The other thing that was bothering most economists was the breaching of the fiscal deficit barrier, and that was kept as 3.3% for this year. And it seems that by 0.1 percentage point, we will be breaching it and will be having it at 3.4%. Personally, I don't believe that that's a very big breach. In fact, I would welcome it because it's the quality of the breach, it's the quality of how the government plans to spend that money, which is more important than a static number of 3.4% as something to be kept as a very sanguine number. And hence, it's quite acceptable that we have been able to spend a little bit more to bring in the relief that's needed in the economy. Now, the economic structure that India has is also a very strange structure because being a developing economy, we've got 50% of our growth coming from services and 17% coming from agriculture. Now, within the 17%, the challenges that we have been seeing is the fact that there have been some ominous clouds, and the ominous clouds is the fact that in the last 13 of the 18 years, we have had no clouds. So we have had a rain deficit 13 years in the last 18 years, which has led to an enormous amount of stress in the rural area. And which is why we really welcome the fact that there has been a relief for the farmers in this budget. And there has been some kind of a guaranteed income for the small farmers in terms of a land-based support that is being given to them. And that should bring in a little bit of de-stressing in the rural economy. If you look at the total combined support that's being given to the farmers and to the middle class, taking off from what Vikas was saying in terms of Jai Jawan, the Jai Kisan and the Jai middle class and the Jai Aam Aadmi, if you combine the total SOPs in terms of the income tax relief being given and the farm benefits being given, it amounts to about 1% of the total consumer spend. So that much of money is being handed over back to the people in this country to spend. And if you look at the multiplier effect of that, it amounts to a total of 1% of the total economy of $2.6 trillion that we have. And that's a significant increase that will be happening in the economy itself if the provisions in the budget are executed in the manner that they have been stated. Having said that, the next question that comes up is it really possible to add up and to have all the magical stuff that's been put into the budget? Is it really possible to have the revenues to support the kind of expenditure that has been predicted in the budget? The total budget spend is pegged at 27.4 trillion rupees. Now, last year there was 20 trillion rupees that was coming in from the taxes. Given that the economy is slated to grow at 7.3% and the tax to GDP ratio is 18%, which is a very healthy ratio by any standards. China's ratio is 20%, by the way, and therefore India does have a headroom to increase the tax to GDP ratio. But even if we keep the tax to GDP ratio at 18% on a growing economy, we should be able to fund the balance $5.7 trillion rupees through a 3.4% deficit that has been budgeted in the given budget. And on top of it, the actual tax growth will grow on top of the growth that we just mentioned. So the 20 trillion should become 22 trillion rupees. And therefore, the 22 trillion plus the 5.4 trillion that we talked about adds up to the 27.4 trillion that's being talked about in this economy, in this budget. And hence, we really believe that it's a very rounded budget taking care of balancing off the revenues and the expenditures, as well as bringing in relief to the sectors in the economy which badly needed the relief that was being looked at.
So, Jajit, you raised very valid points that the overall economic structure is changing. Therefore, there are sections of society that need support. And we agree with that because it has to be equitable development. Otherwise, the fruits of the economic progress, if they are not shared with the larger population, it could lead to chaos. Now, one point. Last year, we as a nation went ahead with Ayushman Bharat, the largest healthcare scheme once it's fully functional. This year, we have gone ahead with the pension scheme, which probably again will be one of the largest in the world. Do you think our tax collections and the other collections the government has are sufficient to sustain them in the long run?
There will be challenges. Also, if I can add to to the bigger issue of NPAs that we didn't talk about, which is eating into the economy. Although this year we see that there is some light at the end of the tunnel, but we don't know whether there are more surprises. But ceteris paribus, if we keep everything else equal, on a growing economy, it's very much possible to fund the kind of expenditures that we're looking for, especially because the expenditures will be ramping up over a couple of years. It will not be an expenditure that needs to be done immediately, and keeping in mind that we are still the fastest growing economy on a very large economic base. We'll end up becoming the 5th largest economy by the end of this year. So if the developed economies could afford it, why not us? And if you crunch the numbers and you add up the numbers, it's possible to do it given the qualifiers that have been put up in all of these programs that have been announced.
I take your point. The only challenge is that like in US, the Social Security, and in UK, the National Health Scheme are facing fiscal challenges. We should not land in a similar situation, but that's a matter of debate for another forum. Riyaz, on direct taxes, I think clearly the theme was individual, especially the lower income and the middle class, And in an election year, I think that was a reasonable expectation and reasonable announcements. What's your take?
Yeah, sure, because being an interim budget, we had not expected many big announcements, but we have been pleasantly surprised. There have been quite a few significant announcements which will directly benefit the Aam Aadmi. Also, one of the sectors, the real estate sector, which required a little impetus, has been given an impetus through the direct tax proposals. So looking at the proposals which directly affect the individual, the lower middle class, the salaried class of our society, I think the first big bang change which has come in is in terms of the rebate provided under income tax. And now there is a rebate for income earners up to 5 lakh rupees. This is a big change and it will really benefit a large section of our society. Having said that, one should be clear that this is a rebate and not an increase in the threshold limits, which means that it will benefit those assessees who are earning less than 5 lakhs, but will not have any impact on assessees earning more than that amount. Also, being a rebate, it means that even if you don't pay tax, you will be required to file a tax return, ensuring that the tax base is not being eroded. Now, this can be a significant benefit because in addition to that, there are certain rebates in terms of investments like Section 80C investments. You have got interest on housing loans which are also exempt, and all this put together may mean that people earning even up to 9 lakh rupees may not be required to pay tax. So it is a significant announcement there. The next one, also affecting the salaried class, is the enhancement of the standard deduction level, and that has been enhanced from the present 40,000 to 50,000 rupees, again benefiting the lower ends of salary earners. In addition, now we also have an assistance on the cash flow by introduction of certain benefits on TDS provisions. So interest earners, interest on bank accounts and post office savings account will not be subject to TDS up to 40,000 rupees compared to the current level of 10,000 rupees. Similarly, on TDS for rent, the present limit is 1,80,000, above which TDS is applicable. That has been raised to 2,40,000. So overall, there will be a lot of benefits for the Aam Aadmi or the lower middle class, upper middle class, and the salaried employees.
I think Riaz, in the morning just before the budget, we were debating whether the 2.5 lakh slab rate can go up to 5 lakhs or whether there will be increase in the ATC deductions. So, and there will have to be a fine balance, and the challenge was that if the 2.5 lakh slab rate goes up to 5 lakh, then there are few lakhs of taxpayers who go out of the tax net. They will not be filing a return. I think a very laudable move. You retain the tax base, at the same time you are passing on the tax benefit.
Absolutely.
Okay. I think there has been a lot of emphasis on infrastructure development. Finance Minister alluded upon the number of roads being constructed, the highways being in full swing, and also there has been emphasis on real estate sector. I think there has been some concessions for both the corporates as well as the individuals. I think it will be interesting for us to understand that in a little bit more detail as to how corporates as well as individuals will benefit now, and how it will provide more impetus to this sector which employs millions of people.
Absolutely correct, because the real estate sector has not been doing as well as one would like it to do, and some impetus towards this sector was necessary. What the finance minister has done is, with a combination of special announcements which are actually directed towards individual taxation, and also one announcement relating to corporate assessments, he's been able to benefit the Aam Aadmi as well as give an impetus to the real estate sector. So the first big announcement there is on capital gains. Currently, capital gains on sale of residential property will be exempt from tax if the proceeds are invested, or actually the capital gains are invested in another house property. What he has, now the finance minister has done, has said that you can invest in even two properties instead of one. This actually creates, on one hand, a big relief for the average taxpayer, especially as he mentioned, in terms of a breaking up of a family where a parent wants to sell a house and provide two houses to the children. Also, it provides an impetus to the demand in the real estate market. So I think it is achieving two things at the same time, giving benefit to the common man and also providing an additional demand in the real estate sector. The second part is towards tax exemption for developers. So there is a section 80 IDA which provides tax exemption to the developer for where these for income earned through development projects which qualify. This exemption was valid up to 31st March 2019. It has been extended now to 31st March 2020. So I think that is another good relief for the real estate sector. The third part is on notional rent. So in cases of a self-occupied property, you are for a second self-occupied property, you are supposed to pay tax on notional rent, even though you might not have rented out that property. In a relief measure, the finance minister has said that now it will be exempt for one additional property. So there is a property that you are living in, another additional property you can still have not rented out and have no tax implication. Similarly, the real estate sector has been facing a lot of difficulty in disposing of its inventory. So the developers have been exempted from the impact of notional rent on unsold inventory for a period of 1 year. Given the market conditions, now it is proposed that that notional rent exemption will be applicable for 2 years. So all in all, good relief for the common man and also an impetus in demand for the real estate sector.
I think Riyaz, so what we are saying is that now you can count two properties as self-occupied, no notional tax on that, and even when you're selling a property and you're investing in it, you can count on two properties for capital gains benefit.
Absolutely.
I think that's a significant move, should provide encouragement to people to go for 1+1 houses, and also addresses some part of the litigation, and to my mind unnecessary one which was going on, where you sell one house and invest in two flats or two houses to be given to the kids. I think that litigation will also end over there.
Correct. I would just like to add a point here.
Yeah.
It has not been spoken about much, but the finance minister made a reference to stamp duty. And you know, when we speak about capital gains, as per the changes that have come in, there could be, we still have to study the fine print, but there could be a stamp duty on transfer of shares through the stock exchange. And that might be a low amount of 0.15%, but 0.015%, but there would be an introduction of stamp duty on all stock exchange transactions on buying and selling of shares. That could have an impact, but we'll have to see how it really pans out.
So Riyaz, devil is in the details. I think this issue needs to be examined further, and how much impact it will have, I think we'll have to look into. This is a significant provision which could impact most of the investors over there.
Sure.
And we'll have to see how the stock markets react to it later on. Moving from direct taxes, I think Suresh, GST has been one thing which has been talked about a lot, and I think FM rightly patted his back and complimented the government in terms of successful implementation of GST, and he spoke about that in his budget speech as well. I think there have been some changes in the customs duty which are of interest to us. So where do we stand on GST today in terms of more changes to be brought in near future? because obviously budget is not an occasion for the GST changes. We have to seek the blessings of the GST Council. But in customs duty, we found something in the fine print. So what's your reaction to that?
So firstly, because let me step back a little and say that every year budget had a FOMO factor, and the FOMO factor was fear of missing out. People used to be curious that what is going to come in budget, and subsequently so many notifications, so many circulars and so on and so forth, and indirect taxes, having so many taxes earlier. So the FOMO factor is gone now. Specifically for this budget, we weren't expecting many big bang announcements. Right. For the reason because since the time GST implementation has taken place, which is 1st of July, there have been almost 14 small announcements or 14 small budgets, one can say, because the controls are now with GST Council members. And we see on several occasions there were changes in the rate, there were announcements in terms of what should be there forthcoming in GST and so on and so forth. Looking at the congruence of 17 taxes and 23 cesses under GST, obviously we were not expecting many changes in this interim budget. And what GST has brought in, as the entire country knows, that registrations which were at 60 lakhs have gone to 1.18 crore. Mm-hmm. And tax collections, as this morning the finance minister mentioned, the Jan tax collection have been close to 1 lakh crore, which we can say is approximately 12 lakh crore, close to 12 lakh crore per annum, which is definitely 30 to 40% higher than the indirect tax collections in the yesteryears under the old regime. So I would say that probably in this budget, except the announcements about the customs, and specifically on customs, he mentioned that there are 36 capital goods where the duty is being abolished, and also there is a revised system of duty-free import of capital goods and inputs for manufacture, which will be used for exports. Now, as I heard Riaz mentioning, the devil lies in the detail. That's exactly what we would want to see, that what is that change, or what is the announcement which has been made? Is it similar to certain schemes which were there earlier, which could allow you to import duty-free goods for exports? If it is that, then definitely it is going to bring a lot of boost to the industrial sector.
Jayjit, I think the rural economy has been under stress, and you touched upon that. And clearly there were some expectations, either in the budget or outside the budget, on the distress which is there in the rural economy, especially the farming sector. Do you think the measures announced in the budget will address that to a great extent, instead of just aiming for the loan waivers that we have been seeing state after state?
I think loan waivers are a bad practice because it destroys the credit culture in the economy. Mm-hmm. Therefore, in the longer term, it's something which does not really benefit the farmer. Mm-hmm. And they will come back to the same distress again and again. What was really needed was some kind of a income guarantee, because if you look at it from a global perspective, India supports its farmers to the least extent possible. When you especially compare to the European countries, we do not provide that much of farm support. Mm-hmm. And therefore, any support that was being extended is quite welcome. Now, the kind of support that has been extended now is in terms of interest subvention, which is a very good measure that has been taken. And second, the interest subvention has been actually increased for those who are able to pay in time. So there is a disciplinary, positive stimulus being given. And that's something very healthy for the structuring of the credit economy in the rural areas. The second point is that they've given a assured income for those who hold small farmlands. Now, there's only for small farmers. Unfortunately, a large part of the rural economy consists of landless farmers. And that's a part that has not yet been addressed. Although you can consider landless farmers to be unorganized workers, and therefore they may get covered under the pension scheme, which is a 3,000 rupee per month pension scheme, but it was not really clear from the budget if they are getting covered or not covered. I think if we can cover the landless farmers along with the small and marginalized farmers, it would have been a complete package. But in the absence of that, or in the absence of knowing what the details are, which we still need to study, I think it has been a budget which goes a long way towards supporting the farmers, one, and second, building up a very healthy credit culture in the rural areas.
Yes, globally we are witnessing that countries are literally competing with each other to attract capital. Okay, and I think we have seen this scenario post 2008 financial crisis, and over a period of time we are witnessing that more and more governments of the countries are competing to reduce the overall corporate tax rates. I think the latest is the example of US being the largest economy. They have cut down their corporate tax rate to 21%. I think other economies are not far behind. Was there a room to announce for the balance 2% Indian corporates also, because this government had initially announced that we'll bring it down to 25%, though 98% of the companies are already covered. Was there a room this year to make an announcement that yes, we are going ahead with 25% corporate tax rate all across?
Yeah, because absolutely there is a need to reduce tax rates, because all economies in the world, like you mentioned, the developed economies and the emerging economies, all are trying to adjust the tax rates to attract more and more capital. So in addition to US at 21%, you have Singapore, which is at 17%.
Right.
You have UK, which is at 19%. So at present, at a tax rate of 30%, or the reduced rate of 25% for a large section of the Indian companies, we still need to go further. Having said that, this being an interim budget, the finance minister may not have had the leeway to really go and reduce the tax rate to 25% for the balance 2% of the companies which have a turnover of more than 250 crores is concerned. So I think this wasn't the right time as an interim budget to bring it. But I would think that as we go forward, we can expect a fall in the tax rates, 25% for sure, and maybe further as we go ahead.
So Riyaz, let me ask you a little tricky question. Do you foresee, based on your experience in India as well as overseas, India achieving a corporate tax rate of 20% in near future?
Well, we are on the path. But whether, when you say near future, one may not expect it in the next couple of years, but surely we are going towards that, and we will have to reach out to a more equitable rate compared to the other large economies to reach out to 20%. So I definitely think there is a path going towards that.
Because I think 25% is a welcome rate. However, if we actually calculate the effective corporate tax rate, which means that we add the dividend distribution tax, we add the surcharge and the cessel, we add the deductions which take place under various provisions, I think the effective corporate tax rate in India is still very high, maybe amongst one of the higher nations that we count for right now. And I think if we move towards 20%, do away with surcharge and cessors over a period of time, I think it will be good.
Absolutely.
Jajit, we are seeing our corporate tax rates, our top collections on the corporate taxes, income taxes and GST all going up, okay? And I think the FM started this part B of the speech by thanking the taxpayers actually. In January, I think 1 lakh crore collections have crossed in the GST front. What changes do you see as an economist in terms of the country moving from 2.6 to 5 trillion and then to 10 trillion?
One of the ways that economists look at how the growth will happen in the context of taxation is that most developed economies have a high tax to GDP ratio. Now, it's the issue of what is the cause and what's the effect. Is it that because they've got a high tax to GDP ratio, they have become developed? Or is it because they have become developed, so they have a high tax to GDP?
Interesting.
And my view is that at the point of growth that we are in, where we are accelerating, and the per capita income is actually very low. So we are a rich country of poor people. And therefore at this stage, to tax the people more would imply that you're taking away spending power and you're taking away the ability to invest, which would actually curtail the growth and will actually decelerate the economy. And therefore at this stage, if we can continue to maintain or actually grow towards a path of lower tax regime, I think that will be very, very beneficial. That's point one. Point two, as Riyaz was mentioning, we are in a global environment of competitive taxation. So if your tax rates are higher, companies operating in your economy will actually form a base outside, irrespective of GAR and POEM and so on and so forth, right? And so willy-nilly, if they move outside, You don't even get the low tax rate that they're paying somewhere else. And therefore, at some point in time, we need to move towards a regime where the tax rates are much lower. Having said that, as I said earlier, that our tax to GDP ratio is really one of the lowest. It's 18% is what we have. China has 20%. Finland, Sweden are almost 50%. So we do have the headroom to increase the taxes, but given the structure of our economy, I don't think it's a good strategy. The other underlying point that I would like to also mention is that a large part of the economy is still an informal economy. In fact, we are not really just a $2.6, $2.7 trillion economy. Our economy is much larger, and we are not able to capture the rest of the shadow economy that many have said is to the tune of 50% of the real economy. And unless we fix all of those structural issues, I think increasing the tax rate at this stage will be detrimental to the growth of the economy.
Suresh, an interesting concept that we are witnessing across the globe is that one by one many countries have started introducing GST or VAT regimes. I think if you look at the Middle East region, one after the other, each of the countries over there is introducing. Whereas we have our own examples from Malaysia, wherein it got introduced and then again it is being repealed. I think what's the trend and what can we draw from that as a country over here?
See, firstly, two perspectives over here. First is India as a country, we had many taxes, and which was not liked by many, and industrialists therefore were in favor of GST. So therefore we have GST. While GST is an indirect tax which is very important for the country, for the revenue for the government, the other countries like GCC clearly has marched forward on VAT for the reasons because even they need to collect taxes to administer their country. Now why is that? Of course, as we know, there are economical reasons and due to oil and certain other factors, GCC decided to embark on this journey. Year before last we saw UAE, KSA, now we are seeing Bahrain. Going forward we'll see also Kuwait and other countries wanting to march forward. So the intent is to get these indirect taxes so that they can administer their country appropriately. Having said so, a country like Malaysia, while they had embarked on this journey of GST, of course due to several reasons it could not fly further, and there were certain also political elements to it, and that was the reason why they rolled back GST. But globally, if you were to look at in terms of Singapore, Thailand, Australia, Canada, everyone is carrying a GST, and from an India standpoint, I would say the GST rate vis-a-vis what you see in other countries. So for example, in Singapore it's 7%, Thailand is 7%, UK it's 20%, and we have several baskets in goods and services because as the famous sentence that a Hawaii chappal cannot be matched with the rate of a Mercedes. So therefore we have multiple buckets of 0, 5, 12, 18, 28. One thing is important, that from a GST standpoint going forward, the government would certainly want to bring these slabs to probably 3, and that's the endeavor. Also for the reason because they want to streamline the buckets of taxes and also the revenues accordingly. While some time back in a recent meeting there was a discussion about the introduction of composition rates, and the finance minister also mentioned about it this morning. That while he has increased the threshold to 40 lakhs, there has been a composition rate for services sector at 6%. So there are also feelers whether there are multiple rates. Of course not, there have been multiple rates for certain sectors due to several reasons. But that's the tax collection which government will have to maneuver looking at the size and diversity of this economy.
Thanks, Suresh. I think one of the stated intent of the government has been to reduce disputes and cut down on the litigation.
Correct.
However, post implementation of GST, we saw the rulings coming from Authority for Advanced Rulings very diverse in terms of one state versus others. Thankfully, now we have a central appellate authority. Do you think this will address the concerns, or it's still a journey which is work in progress?
Well, firstly, I would say just before the budget, I think it was on 23rd of Jan. And Prime Minister himself was chairing that session in that cabinet, and he approved this national bench for GST appellate tribunal. So it's a good step forward. And why is this step? As we all know, and for some of our viewers, as we see contrary decisions coming in different states, the National Tribunal, which is the second appellate level, has been formed to bring uniformity in terms of decisions which are not to the law or not to the interpretation which it should have been. So it's a good move. While that has been done, I would say it will take some time because one has to look at the structure and the construct and the operation of that bench. And would that one bench be sufficient which will be at central, or would there be multiple benches is what one will have to see, because with so many states and so many rulings which have already come, one has to see that how would we streamline those, and that is going to be an important factor in GST in the days to come from a litigation standpoint.
So we expect the litigation to go down, more certainty to come in near future, or it will still take some time?
Well, I would say two thoughts over here. The first thought is looking at the evolution, how the law is evolving, and how the tax assessees and also the department is understanding. I would say litigation may increase because place of supply, time of supply, are the two giants in terms of interpretation in the days to come, which may bring in some litigation. Having said so, definitely the litigation would reduce if we were to have a national bench which will give a diktat, confirming what is the legal position to all the states. So I would say initially, yes, there would be definitely a flurry of litigations which could happen, and over a period of time we would see it tapering down.
Thanks, Suresh. Riyaz, increasingly there has been use of data and technology by the government and the tax department. In fact, a very interesting announcement which the finance minister made, again which draws upon the work which the department has done over the last few years, is e-assessments and anonymous assessments. Are we moving from one extreme to the other, where you do not know who your tax officer is, from a stage where we used to interact regularly with the tax officer?
Sure. Before going into that, I would say that this use of data and technology by the government has been in two parts. So the first part has been to increase the tax base and to minimize tax evasion. So you had the demonetization, and all the data of demonetization has been used through data analytics to increase the tax base and identify evaders. Similarly, transactions like transfers of immovable properties, remittances to and fro, have all been used through technology tools to ensure that the total tax base is increased, and that has in fact turned out results. Over the last 4 years, we have an 80% increase in the tax returns filed. Even on year-to-year basis, last year there was an increase of about 16%. So that is one part of the use of technology. But interestingly and thankfully, this same technology is also being used to address the concerns of the taxpayer, make the interaction with the department less intrusive, and increase the transparency between the tax department and the taxpayer. So as you can see, over the years, we used to earlier file physical returns. It's a matter of the past. It has gone down into history. Then we came up with the e-assessments, and these e-assessments have been working pretty well. I think what we are doing now in terms of what the tax finance minister has announced is a further step in this direction. So we are saying that we will have scrutiny assessments done through the e-platform, so the taxpayer and the tax department do not have a direct interaction. This really will increase the trust factor. You see, influencing will go down, and therefore tax assessments will be far more objective. And I think that is a step in the absolute right direction. We also have a promise that the tax returns filed will be processed within 24 hours and refunds will be processed at the same time. So I think it is an absolute step in the right direction. It is something that we need to achieve. Yes, there will be certain hiccups while the implementation goes on, but definitely it is a very desirable step that we have.
I think Riaz, if I recollect the speech correctly of the Honorable Finance Minister, he mentioned that the anonymous assessments will be done through a system or a panel which will consist of tax experts as well as a tax official. I think it will be interesting to see what kind of a panel or system is formed wherein there is a combination of external maybe or the internal retired people who are the tax experts and the revenue officials. I think it will be a big change if we actually implement and successfully implement it.
No, in fact, it would be excellent. You see, very often we complain that a tax officer does not understand the nuances of the business or the finer aspects of what really ails a business or what are the challenges that we face. By a panel like this, something like this has been tried in the US before, and a panel like this is really going to make tax assessments more rational, more reasonable, and I think in the long run they will really reduce litigation.
Perfect. I think we all wait to see the final details on that, how the scheme will be implemented in near future, but definitely a laudable step. I think it will help in building the trust and confidence between the taxpayer and the tax collector.
Absolutely.
Judge, interestingly, I think the foreign investors were looking for one big thing in the budget, which was that whether the government is able to contain and restrict the fiscal deficit or not. There is a slippage, right? Even though it's just 1 basis point. Is it significant or not so significant from the foreign investors' point of view?
I think from a foreign investor's perspective, it is actually significant because it hurts the sentiments. There is a trust that needs to be developed, and subsequent governments have been trying to develop that trust over a period of time. This is the first time that the trust has been broken in that sense. In material terms, is it significant? It is not significant in material terms. It's significant more from a sentiment perspective, and therefore this is indeed a little bit of a setback in what was otherwise a largely nice economic story that we had.
But don't you think, keeping in view the constraints that we had this year, especially the farm distress, especially the noise about more employment generation, and especially that this being an interim budget just before the elections, I think 1 basis point should not hurt the sentiment that much?
Well, the fact of the matter is that the financial industry runs as a machinery. It takes in inputs, it processes those inputs, and based on that, funds are allocated to different markets. You're absolutely right that we went through a period of distress. 2014, 2015, and 2018 were technically drought years. And therefore, a little bit of slippage is quite acceptable in these very extraordinary circumstances. And given that there is global warming happening, climate change happening, the fact that we had drought years of 3 years and in a period of 5 years, I think there will be more and more governments globally who will be spending more to contain the climate change effect that's happening. But having said all of that and having put them as real reasons why we had a slippage, when it comes down to brass tacks and when it comes down to industry, one has to have predictability in the industry. Just like Grant Thornton puts in a quarterly forecast, many of our clients put in a quarterly forecast, the financial industry puts in a quarterly forecast, and if that is impacted by even a small slippage, it's not taken in that kindly. So yes, there is a sentimental impact, although there is not a material impact. And to be frank, most governments in the world will face challenges due to climate change. This distress came in because of climate change.
And I think it was interesting to see the future growth, and the Finance Minister talked about his vision for 2030, and the government's vision for 2030, and the 10 key pillars over there. And it was heartening to note, especially when you are in the NCR region, Delhi, Gurgaon, that there is clearly a focus on environment and clean air. I think we take a lot of solace over there, even though the weather outside doesn't provide any solace. One question to you, and we were debating before this panel, both IMF as well as the World Bank are predicting that there is likely to be a slight slowdown in 2019 and 20. In fact, when we were analyzing the data, most of the economies, if not all, most of the economies are going to have economic growth which is few basis points lower than the 2018 or 17 data. Barring India, we are going to have few basis point upward growth. But again, post 2008, I think we have learned that we are completely coupled. It may be a matter of few months or few quarters. If the global economy actually slows down and there is a negative sentiment, do you think India will also suffer because of that, and we will as a nation be able to implement the policies announced in the budget?
That's a very good question in the sense that there are two trends that are happening. India is clearly coupled with the global economy. So if the global economy slows down, we slow down, right? But we have a very, very favorable demographic structure of the economy, which we are all tom-tomming about, which is why we are able to afford some things which other economies are not able to afford. So the developed economies such as UK cannot afford some of the welfare schemes because most of them are not working. It's a graying economy. But we can do that. So we were poised to grow at a much faster rate. That faster rate will be clipped down to a much slower rate of 7.3 and then 7.5% as predicted by IMF and World Bank in the next 2 years. Those rates are still a blistering pace as compared to the growth rate of any large significant economy in the world. So yes, we will be slowing down, but it's still growing at 7.5% plus. Had the world economy been growing, we would have been growing at a faster rate. And therefore you would see our contribution to the growth for the global economy has been growing year on year. So in 2008, we were contributing to about 7.5% of the global growth. As of 2019, we are contributing to 14.5% of the global growth. And that's going to increase as the global growth decreases and our growth continues to happen.
So what I am taking from you is our story is more consumption-based story. Therefore, the growth we should be able to sustain that growth.
Absolutely. Absolutely, yes. We are a consumption-based growth story. But what we were also trying to do was leverage the global growth to grow faster. So it's not that we need to be proud of the fact that we are only consumption growth, consumption-led economy. We should have been exporting more. Our failure to export more has made us a consumption-led economy. If there is a silver lining to it, the lining is that we are not crippled by the fact that the global growth is slowing down. That will not slow down our growth.
I think Riaz, when the finance minister started his budget speech and wanted to make certain announcements which are all positive for the individual taxpayer, he said, I want to provide tax certainty. Okay, that was the base which he used to make those announcements in order to provide some relief to the individual taxpayers. I think last 1 year we saw some changes coming in terms of tax certainty being brought in through some of the circulars, etc. Especially in terms of the appeal processes, wherein the government revised the limits. Do you think it has benefited the corporate world?
Surely on the appeal process, the attempt has been to reduce the level of litigation, and by reducing the level of litigation, what the government did was issued instructions to the tax officers to decide all cases on merit, whether they really deserve a departmental appeal or not. But more importantly, it also laid down certain thresholds, and they were much larger thresholds for qualifying for departmental appeal. And these thresholds, having been raised substantially, in fact resulted in a lower tax litigation by about 41%. So 41% of litigations were withdrawn, and that actually put a level of certainty on the final tax demand as far as corporates were concerned. And I think on the litigation front, that has been a very good move that the government has made, and it has actually provided at least a great sentiment, a positive sentiment across all assessees, corporate assessees, and that's a very favorable move. In addition to that, there are various other measures and circulars which they have come in from time to time to address uncertainties in the tax law.
Interesting. So, Jajit, keeping in view the future announcements, where India should be by 2030 and the 10 pillars or the 10 focus areas of the government, any thoughts whether it is only directional or there is a real positive intent and data which can back up such kind of a growth?
I think at this point in time, most of the talk that was there in the 10 pillars was more directional, because this is clearly an interim budget. It depends on the subsequent government that comes in on how much they can take it forward and how much of these proposals are actually accepted. But I think any government that comes in would still follow the same path, because the principles laid out one way or the other, even if it's changed in some of the fashion, they're extremely important for India from a growth perspective. Principles such as we need to grow, and if we need to grow, do we have enough infrastructure in place? Even if we have infrastructure in place, can we grow in a manner that's climate friendly? We do not want to have polluted air, we do not want to have polluted water. Can we keep our rivers clean? Can we keep our air clean and therefore grow based on that? Those are fundamental principles that will not change. And therefore it's good that it's been captured in a budget so that subsequent governments have a direction to adopt and take it forward.
One area I think where there has been slight disappointment is on the disinvestment. I think over the years the successive governments have made very laudable announcements that this is the way we want to go. However, many a times on a financial year basis they have fall short of that. What's the current status and how do we see the disinvestment process going forward?
So I think we have been having ups and downs in terms of disinvestments. At some point in time, beginning of this decade, we touched about 70,000 crores of disinvestment. In 2014, it came down to about 25,000 crores. Last year, we touched again 100,000 crores of disinvestment, but some of the prime jewels like Air India and so on could not be disinvested. They are significant value add to the economy. And disinvestments has two benefits to the economy. One, obviously the government gets direct cash which can then be invested in certain infrastructure. Second is the asset itself can then be run in a far more efficient manner. So there's a double whammy when we are not able to disinvest as per the timetable. And therefore I think it's important that we get our game right in terms of disinvestments and make sure that the asset realization has a far greater impact on the economy.
Our viewers can send us the questions in the box on the screen that they have, and we will try to address those questions given the time limits. Others we will address one-on-one basis. Suresh, we have seen some changes in the GST Council announcement. We have seen a lot of changes in the customs also.
Sure.
I think there was a limited room available this time in terms of making any significant changes, but we still saw something in the fine print over there.
Correct.
Having said that, still the corporate world faces a lot of challenges in terms of GST as well as customs. On the direct tax side, we have seen a lot of movement in the last 1 to 2 years. On GST and customs, what would be your recommendations which the successive budget should address or the GST councils can look into in terms of making the administrative process easier for the taxpayers?
Sure. So see, because as we saw certain directional measures which the finance minister announced, and he specifically gave certain benefits to individuals, to middle class and so on and so forth. From a GST standpoint, I would say, if one were to look at two buckets, the first is the corporate and second is individuals. So from an individual standpoint, if you were to look at, individuals would look at how the rates can lower so that it benefits them. And from a corporate standpoint, they would look at how the rates could be matched to the credits which they have to avail. So I would say directionally they are about to take that step, and which is probably reducing the number of rates today they have, as I mentioned before, about 0, 5, 12, 18 and 28. So that's one thing. The second step which could be, as probably we need to look at the fine details of what is that he mentioned on duty-free imports of goods, capital goods imports, which can be used to manufacture and then used for exports. Now, if it is something similar to like an EOU scheme, which of course had direct tax, indirect tax benefits both, but even if today it has only indirect tax benefits, it can bring in a lot of boost to the entire industrial sector. And these are certain measures which they should be taking. So one of the examples is example in GST, while they are in the process of constructing the new format of the return, and I echo the point which Jayjit mentioned about shadow economy. They want to capture those points in the new return, which is the match mismatch or the e-way bill. So these are the kind of steps which they should take and try to announce certain benefits in terms of policies or schemes from an indirect tax standpoint, which will entice the industrial growth and which will also have a consequent positive impact on the services sector. So that's something which I would say the ministry should look at, or the government should look at going forward.
Thanks. I think we are receiving a lot of questions. Riyaz, this question is on the individual tax. Basically the question is, if the net taxable income is more than 5 lakhs, will the person get that benefit or not? I think there is a lot of confusion on that, whether there is a blanket exemption up to 5 lakhs, so everybody gains on that 12,500 tax, or it is only up to 5 lakh rupees of net taxable income.
Yes, one thing we have to keep in mind is that this is a rebate, and the basic threshold of exemption has not been increased. In other words, you are only entitled to claim that rebate if your net income is less than 5 lakhs of rupees. Anybody else having income above those threshold limits will not be entitled to the benefit.
So it's not a slab rate benefit. People having income of say 20 lakhs do not get any benefit out of that.
That's right.
Oh, interesting.
It's only up to 5 lakhs that you have the benefit.
Okay. This question is on the larger economy, and I think it's a very interesting question. I will route it to you, Jayjit. It says that if the energy prices, on which we have no control as a nation, increase, how will the budget fare? And I think it's a fair question. We saw in the months of, I think, August, September, oil prices shooting up, and then again being brought down. And I think we can link it with the solar energy announcements also which the government made today.
Right, no, absolutely right. So we have been fortunate that the energy prices are moderated. So we saved about $5 billion from our current account deficit
This year?
This year, because of the energy prices moderating. But clearly we are at the mercy of energy prices, because a significant portion of our imports is energy prices. If the energy prices goes up, clearly current account deficit will go up, inflation will go up, and therefore your fiscal deficit targeting will also take a hit, which will then impact everything else. It will be a big cascading effect that will happen. Fortunately, from the government's perspective, and as was announced in today's budget, the government wants to be as free of energy imports as possible, and therefore a focus on local sources of energy, including solar. And therefore the targeting of having 100 gigawatts of solar power being generated and about 20 gigawatts already going live. I think those are all positive steps which will help us buffer some of the impact of energy prices going up and down. But in the next 1 year, if the energy prices go up, we will have some trouble coming our way.
And picking the thread from there, there's also a thought therefore to add petroleum sector under GST over a period of time, and that's definitely going to bring in more impetus to the entire economy.
Suresh, we are on Friday evening. How about alcohol coming in GST? Is it a reasonable ask?
Well, I would say too early in the days to come. Definitely there are other important agenda points which the government is looking forward to, but sooner or later you never know.
Riyaz, as a tax professional, you have seen many budgets and interim budgets. What's your take on that?
No, I think two things stand out in this budget. One is the laying out of a long-term vision, and I think that is extremely important as governments may change from time to time. A long-term vision and a consistency in following certain policies are extremely important. The second is that there has been a clear focus, yes, prompted by the oncoming elections, but in terms of social equity, to go and benefit the larger cross sections of society which are comparatively underprivileged against the minority which are privileged. And I think in terms of agriculture, in terms of infrastructure, and in terms of giving specific reliefs to the common man, I think this budget really achieves quite a bit.
So I think it's a fine balance between larger socio-economic objectives as well as fiscal prudence, where the government is saying, "Hum saath saath hain." I think in the interest of time, we will end our budget webinar here. Thank you once again for joining Grant Thornton's webinar. We are still receiving many questions which we'll address individually. Thank you very much for joining us today and have a good Friday evening. Thank you.
Thank you.